Hello once again, Ohio. This is the Retirement Blueprint Show with Tim Lofton of Axum Planning and Wealth. I'm your host, Spike Spangle, and on today's program, we're going to talk about the tools of your retirement blueprint. You know, we've been saying the retirement blueprint for months. We talk about it on our weekly radio show together that we do every single weekend. But the retirement blueprint, what exactly is it? What does it mean to you? What are the tools that go in it? That's what we want to talk about today. So please stay tuned all the way throughout this half-hour program. Mr. Tim Lofton, what's on your mind this week, buddy?
Well, we're going to talk about gambling.
Uh-oh.
Right? You know,
I want to gamble. Not with my retirement.
No? Well, this is exactly that. My concern is that people may be gambling when it comes to retirement. What I'm talking about, Spike, is the Monte Carlo simulation. It just sounds like gambling, doesn't it?
Yeah, it does. Every time I hear this. But I always thought it was supposed to be a tool in your favor. Please tell me, what exactly are these Monte Carlo simulations?
Well, it is a tool, and it's a tool that can help figure out probability of success. And I don't want to get into, you know, all the math and metrics, but at the end of the day, we're looking at, you know, a snapshot in time. And a lot of times these are more when people are coming into the office, it's almost like it's a set it and forget it type of strategy versus it being what it's actually intended for. And it's more for education than for prediction.
Okay. Then in these Monte Carlo simulations, do you mind me asking, I don't want to lose the audience, and quite frankly, I don't want to lose myself on this, all right? What kind of inputs are we talking about putting in for this simulation on our investments?
Sure, and the input is one of the biggest concerns. You know, when we have a client that comes in to us for the first time, and a lot of times they will bring with them, you know, this financial plan, and they'll put it in front of us and they'll say, you know, we met with an advisor and they ran this report, and it says that, you know, I have a 90% chance of success. And that's what the Monte Carlo simulation does, but it's only as accurate as the information you put in it. And so they're looking at things like inflation rate. And, you know, somebody could put in 2% or 9% and come out with completely different outcomes. They're looking at average return on investments. And a lot of times that number is fixed. Well, we understand that markets go up and down. They don't give you a fixed rate of return most often. And so again, there's those dangers in the input phase that can give us the wrong answer. And if you look at the Monte Carlo simulation as a whole, it's looking at 1 million potential possibilities of probability.
Okay.
And it's taking basically the middle one and saying, here's your chance of success. Well, by definition, that means that there's 498,000 chances that it could be worse than what you're looking at, and 498,000 chances that it could be better. Now, if it's better, good for you, you don't have a problem. But what if one of those 498,000 possibilities happens on the bad side? That's how people run out of money in retirement.
Okay. So what would you prefer, or what kind of tools do you use, Axum Planning and Wealth? Or do you run this as one of the metrics and use other as well?
We absolutely run it, and I think it is something to look at because, again, it helps with the educational side of things. We use conservative numbers so that we believe, you know, the probability chance of something happening is definitely higher. It's when you hang your hat on this thing and say, okay, if I do this today, I'm good to go in the future, and then don't ever look at it again. That's really the danger.
Right. And I think one of the ways that we gamble with our retirement as well is that the onus of choosing these funds has all been put on ourselves, right? So, you know, what do we do there when it comes to choosing those funds at work? Can we call an independent advisor, or should we just count on the 401k administrator for gambling on our retirement choices?
Well, you know, a lot of this comes back more to human behavior, and that's something that's hard to account for in, you know, Monte Carlo simulation. It's making the assumption that people are going to do what they're going to do. They're going to make the decisions that they make. They're going to have sometimes irrational responses to the market, and so it's not even that they were invested in the right thing or not invested in the right thing. It's what they did along the way. You know, maybe the market went down and it scared them and they pulled it all out and went to cash. That's impossible to account for in a simulation.
In these simulations on the Monte Carlos, does it take into account things like extreme happenings in the market?
Armageddon, COVID.
Yeah. So does it take in those worst case scenarios?
No, I mean, it can't, because those are one-off events. And so, as we're looking at this through the lens of retirement, again, it's a tool, but it needs to come along a lot of other tools in that process. And one of the things that we are a big proponent of with the retirement blueprint is looking at things like an investment policy statement, looking at the risk someone is taking, because that's going to impact that Monte Carlo simulation. Having an income plan put together. A lot of times, when we look at people coming into retirement, they've been used to the accumulation method of investing, but they haven't really looked at that distribution phase, which they enter in retirement. And again, those are things that all go together, looking at the taxes, the future inflation numbers. All of that is going to impact that final outcome of making sure people have the income they need to retire and that they don't run out.
When we come back from the break, what I'd like to do, because this is a lot of great theory on Monte Carlo simulations, how you should apply them to your investments, your savings for retirement. If you don't mind, though, I'd like to ask some real life situations, some clients, maybe some people that you've plugged into these numbers and what's going on in there. Before we go to break, though, what are some realistic expectations then we should have with something like a Monte Carlo when given to you by a retirement planning specialist?
I believe that, it is a good tool. I mean, it is giving us a probability of a potential outcome in a snapshot of today. The danger is that when we rely on it too heavily. So I think it's a good tool. I think we should use it along with a lot of other tools as we're trying to figure out if we're on track.
I have an idea. One of those other tools might be your very own retirement blueprint.
That is absolutely the tool.
Before we go to break, why don't you tell folks a little bit about that today?
Yeah, so the retirement blueprint is going to give you a written plan. It's going to give you a plan for your income to make sure that you can retire and stay retired. It's going to look at things like your taxes and what strategies to use to best get that money out that you've been saving all these years. It's going to look at your estate plan. It's going to look at things like long-term care stays, and of course, making sure that what you have goes to who it's supposed to go to with the least amount of fees possible.
That's the retirement blueprint. If you would like to get started on your own retirement blueprint, and why wouldn't you? There's no cost to it. You call the phone number you see right here on the screen. We will schedule an appointment for you. And yes, we'll run one of these Monte Carlo simulations, but it's only one of the tools. What are your lifestyle needs? What are your spending goals? What do you want your retirement to look like? That's what your blueprint is about. Call the phone number you see right here. More with Tim Lofton right after this.
My most rewarding moment for helping clients is seeing the fear of the unknown disappear from their face. Some people are worried about a potential nursing home stay. Some, it's market volatility and losing their money in their investment. Some are just genuinely concerned about the direction of the economy. But for the most part, the whole taking away of fear and concern starts with having a plan. Not something off the shelf, but something customized to that family, where we can sit down and get to know them intimately, to understand what their hopes and dreams are. What do they want to have happen after they're gone? And make sure that those things happen. The retirement blueprint is exactly that. It's a blueprint for retirement. It's built off of the 5 cornerstones of retirement planning. That's developing an income plan, creating a tax plan, an estate plan, a long-term care and health care plan, and of course, the investment plan. And the best part is we have a team of people to come alongside to do all of those things, that have the credentials and the expertise and the years of experience to make sure that everyone is coming together to create the best plan. It takes those worries out of their head and puts solutions down on paper.
Welcome back to the Retirement Blueprint Show with Tim Lofton. I'm your host, Spike Spangle, and every single week we talk about retirement solutions. Today we want to make sure you're not gambling with your retirement. You hear phrases like Monte Carlo simulations, and we're trying to make sure that you don't run out of your money in retirement. But lastly on that, just the realistic expectations on it. We use this as one of the tools. You want the entire retirement blueprint. Are there things that are unreliable about, I mean, I know it's running a million iterations on will your money last or not, but are there things that maybe aren't very reliable in the Monte Carlo?
Well, human nature. You know, I mean, erratic behavior, how someone responds to economic conditions, to things like COVID, where people did things completely different than they ever have. There's no way to simulate that from a mathematical metric. And so as we're thinking about this tool, it's just a matter of understanding that it's a tool. It is a snapshot in time. It's giving us insight into what could probably happen. And I'll give you an example, Spike. We had a client, this is about 6 months ago, that came in and they had a plan put together for them by another company and another advisor, and they just basically wanted a second opinion. And so they came in with their plan and they said, you know, Tim, take a look at this and just tell us, you know, what you think. And so, you know, I read it and I said, well, you know, one of the first things that stood out to me was that the inflation rate that they had calculated was at, you know, 7 or 8%. And, you know, while that was, you know,
what it was a year ago.
a year ago, that's not a historical average. In fact, that's, you know, about double the historical average. And so as they were looking at, you know, the plan, the way that it laid out, they were indeed on track, but they were actually much further ahead than what they actually thought. The second thing is that it had a rate of return that I think was higher than what, you know, I would want to bet on in my Monte Carlo simulation. And so interestingly enough, it offset. So the inflation rate was too high, the returns were too high, and so it ended up being okay. But it was enough of a concern to them that the way that they had gone about that and the danger that they could have possibly gone through was enough to make them question, you know, where they were and wanting somebody else to take a look at it. And so as we got into it, we started looking at, you know, our wealth management team took a look at their investments and they started going through the risk, and the risk was completely out of line for what they felt comfortable with. And so they were...
The risk that was being suggested to them from this plan was not what they wanted.
Was not in alignment with how they felt. And that's not an uncommon story. You know, so many people have an idea of what they think they own and how much risk they're taking and whether or not they're on track. And it doesn't hurt to get a second opinion.
Okay.
I mean, we get a second
Seriously?
opinion about
Come
everything.
on. I got to ask you. Look, there's folks sitting at home right now. You don't mind doing the second opinion. You don't mind taking a look at somebody's work that was already put together across the street at a different kind of office. I mean, I'm sure you're kind of curious, but like you didn't mind taking the couple hours of your time to go through it and see if it was actually appropriate for them?
No, because almost every person that comes in to us is coming in for a second opinion. You know, if they have, you know, investments, if they're getting close to retirement, they have a plan. So for us to take a look at that is kind of a starting off point. You know, we are looking for, you know, what is the holes in this plan? What are the potential pitfalls, and making them aware. And, you know, we don't have an agenda to sell them something or to get them to work with us. We simply want to understand if what their idea of retirement is in alignment with what they're actually doing.
So it's kind of a respect in the industry, because we do hear this all the time, get a second opinion, whether it's us, whether it's someone like us. But then it's the breadth of what the firm itself can do. Yes, there's investment advisors, accumulation advisors, maybe some decumulation advisors who help figure out how you're going to get the money out of the accounts and make it last. But you do what is called holistic planning with the team at Axum Wealth. So it isn't just the investments. What else is the retirement blueprint? Because that's what we're talking about, the tools in it.
And I think this is where a lot of times people miss, is they do have an investment plan. Maybe they have one of the big financial services companies that they work with, but they're not getting the tax planning and the tax strategy behind how they're going to get that money out. They don't have the legal expertise. You know, we have a estate planning attorney and a business planning attorney in our office that we utilize for that area of planning. But more importantly, the whole team is talking. And I think that's probably the biggest miss that we see and the biggest difference we see in the industry as we look at other companies. most of the companies out there are really just about the investment part. They really don't get into the tax planning and the estate planning. And, you know, for people that are selling businesses, you know,
Oh, that's huge.
that's a totally different level of expertise.
Right. Because you're dealing with a whole bunch of other factors there. I mean, if the company is 5 people to 50 people, you could also have the company 401k. Who are the assets going to go to? Is that business continuing? You don't mind taking on all of that as well? I mean, doesn't that take a whole team?
It does take a whole team, and that's why we put together the team that we had, because, you know, people demand it, they need it. And, you know, we have just this year, we've had 3 different clients who have sold businesses, 2 of them to family members. And being able to help them navigate that and the tax strategy behind that I know could have cost them hundreds of thousands of dollars had they done it one way instead of another way. That's where you know, we're really adding value to that relationship above and beyond the investment piece and all the other things that we do.
It's always been one of the strong backbones of America is the small business owner. And you know, what can we create on our own, find our niche, do what we want to do for work, but then what do we do with that legacy and how do we pass it on? Whether it's leaving it in name or leaving it to one of our relatives, or more importantly, making them buy it from us.
Right.
so we can go off and enjoy that.
And you know, it's not a bad annuity to have that you're selling it to your kids and you're going to get a check for the rest of your life.
Yeah, yeah, fantastic. So the retirement blueprint, tools in it, talking about things like estate planning and that legalization and so forth. Are you able to handle that at Axum Planning and Wealth, or is this something you outsource and you quarterback it all together?
No, everything is insourced. We do quarterback it within the different partners in the office. We have different partners in charge of different areas of our practice, but that is all integrated. There's a synergy there where everyone that's working with a client that's working on that plan is all sitting around the table, and it is a difference maker when it comes to the result of that plan. And the thing is you know, most people are paying for, they have a CPA, they have an attorney, they have a wealth management team, maybe they have a financial planner, they have all these people that they're paying for, but none of them are talking. None of them are having a conversation collectively about a client. They're getting individual pieces of advice that sometimes go directly against the advice that maybe one of the other people that is working with them is giving them.
Right. So make sure that your people are all coordinated together. If you're trying to build your wealth, you want a team that works together, such as Axum Planning and Wealth, but whether it's us or someone like us, make sure that you're getting a plan together, whether you're in your late 40s, 50s, if you're in your 60s, or even if you have already retired. As Tim was saying, get a second opinion on your plan. And if you don't have a retirement plan, get one right here. Call the phone number you see on the bottom of the screen. When we get back, we're talking about tools in the retirement blueprint. Strangely enough, a report that came out, ETFs, $7.4 trillion industry, but even ETFs can be one-hit wonders. I thought these were collections of funds. We'll talk about that when we get back with Tim Lofton right after this.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to the Retirement Blueprint Show with Tim Lofton of Axum Planning and Wealth. I'm your host, Spike Spangle, and we're talking about the tools, literally, in the Retirement Blueprint, the kind of things we use. Let's bring this down to basics. Look, we know we've got those mutual funds, maybe even exchange-traded fund choices inside our 401ks. ETF industry, as I just said before the break, is about $7.4 trillion.
With a T.
with a T. Getting close to our debt, right? Let's not go there. Right?
That's another episode.
That's a whole nother episode. But you even said with ETFs there can be one-hit wonders. I thought these are collections of funds, much like mutual funds. I thought they were supposed to provide a relative amount of exposure and stability. So how can there be one-hit wonders in the ETF?
Well, interestingly enough, if you look at a lot of the ETFs out there, you will see what we call concentration, where, according to this report, almost 40% of the money invested in one idea, one index. And so the one-hit wonder comes out of when you bet on the right index. You get the right market, you bet on the right index, and all of a sudden it does really well, and then the marketing department gets involved and they start, touting how great their investment is. The idea here is not that ETFs are good or bad. It's really about the education of understanding what you own. And a lot of times we will see people come into our office and they'll think, I'm really diversified because I own this or I own that, only to find out that that's not the case. Sometimes in mutual funds where there's a lot of overlap, they may own 6 or 8 different mutual funds, but they own a lot of the same things. Or with the ETF industry where you will see, where 40 or 50% of the money is actually in one index. And, so the level of risk that maybe someone was exposed to, they had no idea.
Tim, I can remember when I signed up with an organization recently, and there was a healthy, I think, 40 funds. And I'm in and around the industry. I mean, I'm your radio host, I'm your television host. You're the one who is a retirement planning specialist. But I figured I knew a little bit about this, but I gotta tell you, after a couple hours looking at what I thought I was supposed to know, it's confusing, it's overwhelming. And then eventually go, I don't know, I'll pick 20% of this, 20% of that one, 20% of that one, and I want to go enjoy the rest of my dinner, right?
You and everyone else.
Okay.
I mean, you're in great company, Spike. I mean, that is the norm out there, is that, there's 2 or 3 different ways that people get to their 401k decisions. One is they ask their buddy at work that is the self-proclaimed investment guy at the office. Sometimes they look at historical returns, what did really well last year, and then they buy it, which means a lot of times they're buying it at the high. And then, third is that they actually get advice from someone that does this for a living. Not their brother, their sister, their cousin, but actually somebody in the financial services industry. I can tell you which one does better historically.
Right.
And there's been studies. I mean, Vanguard's done studies. We've talked about this in the past of, working with someone that does this for a living makes a fairly significant difference over time.
Okay, so are there solutions that you would say to folks? I mean, look, there's all different kinds of online business platforms. You can say Yahoo or whatever. So you can plug in the name of something and find out, I don't know, what its returns. But we always say that past performance, no guarantee of future results. You shouldn't even look at that. Maybe start to look a little deeper at things like the price and the earnings ratio. But how are people supposed to choose between something as simple as an ETF or a mutual fund inside their retirement accounts at work? What basis should they be making their decisions on?
Well, I don't think that there is a simple answer to that question, Spike. I mean, you certainly could, subscribe to, one of the online services and do your own research. But the question is, what are you looking at? Are you wanting to become a financial advisor for a living in addition to, being a mom or a dad or
and then an engineer and a coach
and an engineer, or does it make more sense to maybe get some advice, to take time to, whether it's us or someone else, to sit down with them and it's not even necessarily the investments that they're picking, but are they saving enough? Are they on track to get to retirement? What impact is it going to have if they take this risk or that risk? And how many years do they have to continue to work on the pace that they're going to get to where they want to be?
Okay, I'm going to put you on the hot seat. Okay, compliance. We're going to put out a yellow flag right now. You're probably going to want to watch this. What about then sector ETFs? I have heard about things like launching of crypto ETFs, and then of course there were technology ETFs, and you had your bond ETFs, which did poorly last year, along with the 60-40. Should we be looking at blended funds that have a little bit of everything in there? Or do we pick sectors, countries, industries, and hope that we got the right one?
The ETF industry, was built as almost like a trading instrument to be able to give us, exposure to certain areas. And so, as a wealth management team, as they're looking at these things, they may be looking at an industry that's out of favor. And so they may be looking at a specific ETF because they want exposure in that area. The question is, as a layperson, as somebody that maybe doesn't do this for a living, how do you know? Sometimes we have people that'll come in and they'll say, hey, I think banks are going to do bad, or I think this is going to happen, or that's going to happen. And our question is, well, why do you think that? It's like, it's usually something that doesn't even make sense as to what they think that outcome is going to be.
And there are the day traders out there, and there are the people who are looking for the candlestick analysis and trying to figure out, how to make a few $1 million off of, micro trades. But I think as we're getting to retirement, as I think for our viewers here in Ohio, for myself included, is that we're not looking to be timing the markets and jumping in and out and watching all of that all the time. I want a strategy that can kind of take some of the storms and take some of those hits. And I know that maybe there's some other sectors that are going to do well and so forth. And so we build that diversified portfolio even within different asset classes?
Definitely. I've heard our wealth management team say over and over again that it is not a matter of picking that one good thing, but it's about not picking the bad things. It's about, my son plays golf, and the coach says all the time, it's not about, hitting great shots. It's about not hitting bad ones. And that's really what diversification and building those portfolios is all about.
Yeah, that coach would have a terrible afternoon with me. I got a lot of bad chunks in me, a lot of 90-degree angle shots. Where did that go?
How is that possible?
Yeah, but we want to make sure we don't have those 90-degree wedges totally miss out into the bushes with our retirement strategy. So please, this is what we do. This is what Tim does for you. We would be glad to do a review for you. We'll take a look at your investments, whether they're inside your 401ks or if you're close to retirement, or even if you are retired already. As Tim said before, we will do a second opinion for you. We want to get you your own retirement blueprint. So call the phone number you see right here, 855-684-3485. Thank you so much for watching the Retirement Blueprint Show with Tim Lofton of Axum Planning and Wealth. We will be back again next week.